Welcome to Beyond the Press Release, a production of AGORACOM, in which we take the time to speak with small cap executives after they put out important news. And he's done it again today. With us is Brent Suen, President, Executive Chairman of Logiq, trades both in Canada under LGIQ and the US on the NEO and the OTCQX LGIQ. For those of you new to the story, because you saw the headline about third quarter preliminary revenues, great numbers. This is what you need to know about the company first. I love it because the way I describe them is they're the AGORACOM of the e-commerce world. So just like AGORACOM helps small mid-cap companies win the attention of investors, Logiq helps small and medium business compete against mega brands in e-commerce, which, by the way, that market surpassed $9 trillion in 2019. But mega brands control about 70% of the US market alone, making it harder for small, medium business to compete. That's where Logiq comes in. More than just lip service, they're an award-winning e-commerce and fintech solutions company. Revenues in 2020, $38 million. So they're not just talking the talk, they're walking the talk, they're walking the walk. That came in from two divisions. And today's news, the headline, Logiq sees Q3 revenue exceeding 7.7 million, with gross margins nearly doubling to more than 29%. I think that's the big part of the headline. Brent, welcome back. Congratulations. I know it's not officially filed, but when you put up preliminary revenues, you probably have a pretty strong sense of the number that you're going to put out there.
We do. Thank you. What we are the most excited about, George, is that gross margins have more than doubled year over year. Big. And that's important. That, as you know, that's extremely important in our industry because institutional investors take a look at that and they want to see similarities to the big cap ones that have gotten there by way of building their margins up and certainly layering on the clients and expanding revenues. And
that's no easy thing to do, right? Just to double margins at the end of the day. We're going to go over some detail. You're going to share some slides with us, but tell us in the meantime, like ballpark, how are you able to do that? How are you able to double margins, which is so important to every business on the planet?
It was certainly not an easy task. Hats off to our team. They did a tremendous job. Essentially what it was the refocusing on higher margin clients during COVID and getting rid of some of the lower margin business lines. But obviously, when you start to cut those back, you see that they call it the hockey stick, right? Very, very popular in Canada. But yeah, so we hit that V and we emerged from it, and we're tracking back upwards. And we've got room to go. We absolutely have room to go. And that's the exciting part about it. Being able to tell investors that yes, we've already moved down on the revs, back up on the revs, and gross margins have more than doubled.
Yeah, that's a great restructuring of your income statement. That's for sure. Let's go to the story, because look, like all great tech stories, you guys are cutting edge, which also means you're not selling widgets, and and we got to take the time to describe and really illustrate to the shareholders what you guys are doing, because I think it's fantastic. Pop up a screen there. You're gonna share something with us for us to go together, right?
Yes, I am. Bear with me for a second here.
Yep, take your time.
Okay, and let me give a little context real quick. Our story has not been an easy one to explain, or B, for a broad swath of investors to go, oh yeah, I get it. I see what they do. So this week I have restructured all the messaging and tried to put it forth in a simple way. So what I'd like to do is very quickly just describe what we do.
Yeah, for sure.
So that anyone new here can get it. So are you able to see that?
Yep. Overview of the Logiq business units and rationale for separating them.
Yes.
Something we talked about last time. Let's get into it.
Exactly. So before I describe what we do in a simpler way, let me describe what we're going to do with those and why. So if you look at our business, if you look at Logiq, we've got two business units or two subsidiaries, if you will. One of them is named AppLogiq, and the other one is named DataLogiq. AppLogiq, we work in emerging markets. What are those? Those are places that are far behind the US, in Canada, in Europe, and catching up. A lot of opportunity there because younger companies become bigger companies, lower income consumers and demographic segments increase, thereby creating more opportunity. And so we've had a specific focus through AppLogiq on emerging markets. And that goes back to when we started 6 years ago.
And what I love about AppLogiq is that here's George, I'm in Malaysia or Southeast Asia somewhere, and I need a mobile store. I can't use Shopify, and you guys make it simple by AppLogiq saying, hey, George, you want to sell widgets? Here it is, real simple mobile app creator, and you're in business. I know I'm oversimplifying that, but
no, but actually you're not.
That's why you're having so much success.
That really is it. And we from the start, we designed it to make it simple, because when you look at small businesses, it's usually, mom and pop, right? There's just a couple of people in there. Maybe they've got a very small staff. Maybe the kids work there. They don't have time to be building apps, right? And so although they realize it's important, unless it's super simple, they're not going to do it. And so from the beginning, it's always been simple. So what we do in these emerging markets is exactly what you said. It's actually called Fintech or financial technology because there's other stuff involved, which I'll get to in the next slide. But just to give a very easy to understand description of AppLogiq, we work in emerging markets. We do financial technology, or the buzzword is Fintech. The other side of the business, DataLogiq, we do online advertising, online marketing, and what's called lead generation. Now, what is that stuff? That is helping businesses that are already online find new customers, get in front of them. So those two business units within Logiq, we've tried to tell the story that they make a lot of sense, and they do, but when we've gotten in front of analysts and institutional investors, they look at it and say, yeah, you can connect the dots, but in reality, if you were a standalone emerging markets fintech company, and you had a standalone advertising, marketing, and lead generation, or as they call it, ad tech company, your valuations would probably be a lot more what your peers are, which I'll talk about shortly. So we made the decision, and I touched upon it last time, to separate the two, but really separate them. We are going to take the AppLogiq business public on its own. Shareholders buying into Logiq Inc. will receive shares of AppLogiq. Okay, they can always buy them later after we're public, but I believe that the better way to go is to buy our shares now and get the spin out shares. We'll be talking about that a lot very shortly, because as we had also mentioned, we intend to complete that before year's end. I've got a more aggressive timeline that legal counsel suggested I not go into, but I think
that's the entrepreneurial side of you too.
Right? That's right. So we're going to get it done because it's extremely important to us and to shareholders. We call it a pure play, a separation, spinoff, and again, the valuations are considerably higher. Once those two are separated out, we will continue to grow those through internal or organic growth, as it's called, and M&A. And so I'll talk about that shortly. So, all right.
So that's a great description, and in fairness to you guys, it just requires that. The only reason people might have difficulty right away wrapping their minds around it, because this is all very new, right? These are still very new kind of businesses. So now that you've described it there, it's easy to understand. AppLogiq is the app, DataLogiq is the data side, marketing, e-commerce, pretty simple. Let's hit the next slide. Okay. So this digs down a little deeper into my simplified description, but I kept it simple as well, because the four things we do in AppLogiq, if you look at the buzzwords, they're not always so easy to understand. What I did is I just framed out
where we operate. So when we say emerging markets and people go, oh, well, where? Indonesia, Malaysia, Singapore, Philippines, Vietnam, that's in Southeast Asia. Big emerging markets there. We just entered into Africa through a Nigeria partnership. So those emerging markets, there's 400 million people. Actually more than that, if you include all those countries, there's closer to 600
definitely, especially
million.
Indonesia just on its own.
Yeah. So what do we do there? All right, we've got.
And by the way, Nigeria, Brent, you guys are in a great place, because I've been hearing that Nigeria by 2050 may be the most populous country in the world, based on how fast they're growing. China's slowing, India's slowing, Nigeria. So it's no longer just emerging markets. These are really strong growth markets. They are, and on another slide, which again I'll keep brief. I highlighted a couple of companies that are operating in these markets and how they've done. But just to touch upon what we do there, just so our viewers know, we have an e-wallet. What is that? That's basically money on the phone, so you can pay for stuff through the phone. Okay, delivery and logistics. What is that? Okay, so if you pay for something on the phone, that means you ordered it on the phone and it's got to get to you at home or at work. Delivery and logistics, that's getting it there. All that's done through one of our apps. Microfinance. What's microfinance? Oh, that's great.
Borrowing money in advance of your paycheck through an app. Okay, borrowing money against your savings done through an app. That's what microfinance is. And then finally, the thing that you described earlier, the do-it-yourself app for small businesses, that's our small business app. Again, it's built on the phone, it's accessed through the phone, it's for people with smartphones. And those are the four things we do in very simple terms. If anyone wants greater detail, it's on our website. But I think
important, Brent, is simple terms, but you guys are succeeding. It's one thing for GeorgeCom app to say we're going to do e-wallets, delivery logistics, microfinancing, and a small business app. Yeah, we're gonna kick ass, but you guys are actually doing it.
We're certainly putting our best feet forward, so we're excited about it. Just touching upon DataLogiq very quickly. What do we do? Three things. We help companies advertise their stuff. We help them market their stuff, and then we help them find leads. Leads are people who buy that stuff. And all that's done through artificial intelligence, a lot of complex algorithms, and that you see where it can get very complicated very quickly. But you don't have to understand all that. All we do is we help small businesses get their stuff in front of people who want to buy that stuff, and then.
And is that for Southeast Asia also, or does that apply to any North America and any other markets?
That's a good point, because therein lies the reason for splitting the company into two parts. Although small businesses need advertising and marketing and lead generation, in emerging markets, what they really need is they just need the presence here, because they still get a lot of foot traffic. So people already know who they are and where they are, but when they want to buy something, they already know how to find them. They don't need to be advertised to. So emerging markets are still further behind the curve for advertising, marketing, lead generation. And by the same token, businesses here in North America, Shopify and BigCommerce and Wix dominate that space. So there's a real solid reason for separating the two, because although you could say small businesses need this and the ones advertising need to be online, well, they're already online and they already got there by way of Shopify. And then these folks in emerging markets, they just need to be online. So separating it into the pure plays made a lot of sense, because maybe in 7 or 8 years, all this stuff will merge together. But right now, being separated out would lead to higher valuations, which I wanted to talk about, which I think that's the.
And I was about to ask you that. I was about to say, let's talk about the valuations and what you guys are seeing out there.
That's right, because I think that's what investors really want to hear. They want to hear, okay, where are you guys valued? What are your peers valued at? And what are you going to do to get there? And how are we going to make money? Okay, it's pretty straightforward. So there's not a lot of emerging markets fintech companies that trade in the US. There's just a handful, and the handful are the ones I just outlined here. Grab, which operates in Southeast Asia, they're going public through a SPAC that'll close this quarter. Share price is modest, but look at the market cap, $45 billion.
Now, devil's advocate, what kind of revenue are they doing? Because you got to just
they're doing about 2 billion. So they're valued at about 22 times revenues. So they got a big valuation multiple. So there's
and if you applied that to you guys, where you're doing, last year it essentially did $40 million in revenue, you're talking about an $800 to $900 million market cap if you apply the same multiple.
You can get there real quick. Another company in this sector, SEA, $350 a share. Actually, last time I was on here, they were below 300. That's been a monster. It's got a $200 billion market cap. Southeast Asia.
Unbelievable.
Okay? Trading at about 70 times revenues. So it's another big valuation. GoTo, that's coming public through a SPAC. Everyone will see that next month. I know, because I know those guys. $40 billion estimated market cap. Another big one, also trading at about 25 times revenues. Jumia, when you mentioned Nigeria earlier, Jumia is a relatively new entrant. I think a year and a half ago. They've got a $1.8 billion market cap. They started at 100 million, and they're up 18x in I think about a year and a half, 2 years. Clearly capitalizing on Nigeria. Then you've got Peak Fintech, Canadian company.
Friend of AGORACOM. They're on AGORACOM.
Okay, there you go. So all right. So your viewers will, if they look back 3 months ago, they'll see the share price. I think it was 2. Peak Fintech is a great example, which I actually have them on another slide, because what we're doing now is analogous to what they did. And I think everyone who owned it from 2 and has held it till now, I mean, they're up 4.5x, right?
Yep.
And they're clearly not stopping there. So clearly investors saw the opportunity in a micro cap going to small cap space. So we think we'll do the same. And then there's another huge one that operates in Brazil, Mercado Libre, 76 billion. The point about these is that there's not a lot out there to choose from. And the ones that you can choose from are either these big gargantuan market caps or the small ones like us or Peak. And can you narrow that gap? Yes. The way we're going to start off with AppLogiq, we're looking to value it when we spin it off at around 100 million. So it should have a lot of room to go.
Yeah, that's great. That's a great way to put it to perspective.
So how are we going to unlock value for what is going to remain in Logiq Inc? That will be DataLogiq, the advertising, marketing, and lead generation service. We are going to grow through strategic mergers and acquisitions. Actually, the way that we built DataLogiq was through 3 acquisitions. But most of that, George, was acquiring IP and technology. We've grown that segment of the business to 25 million in revenues. We intend to grow it next year, both internally and through M&A, up to 50 to 75 million. And then the following year,
that's tremendous growth. Oh, that's 2 to 3 times where you guys end up in 2021.
It becomes enabled by a higher share price and a higher market cap, much like Peak Fintech did, which I will describe in the next one. Let me get through this, and then I think there's even more excitement here. So we intend to build up to 150 to 200 million through M&A and internal growth, and be profitable by 2023. And the reason why is because the valuations in this sector, not only are they huge, but what enabled these companies to grow so fast is the public markets. All right. You look at Magnite, Trade Desk, Lightspeed, another Canadian company.
Yep.
Inuvo, a little smaller, and then LiveRamp. Big market caps, big valuations, an average of 27 times revenues. And here we are, DataLogiq, and I backed out our AppLogiq revenues just to put it in perspective. We're about a 12th of what the averages are. Okay. So here's where it gets interesting for investors. Okay. So we were talking about Peak Fintech. I was on Wall Street Reporter last year And I was in the virtual backstage with their CEO, JJ. And I was listening to a story and I thought, wow, man, that's really cool. We do that stuff in Southeast Asia. Their market cap was about the same as ours, around 60 million. And for those who don't know them, they're a China-based fintech company. We operate in Nigeria and Indonesia. But literally since the time that I was on with them, their market cap has just exploded. But it's really done that just right here. If you can see that little hand on the cursor, just in a couple of months, their stock.
Yeah, that's when they started telling the world, here's where we're going, and giving revenue guidance and telling the world where they're going.
Absolutely. And here's the thing, investors that bought in at 2 and 3 and 4, the way that, so they rewarded Peak Fintech with a higher value. Okay. Peak Fintech in turn rewarded them because they went out and they used their stock and made some acquisitions and raised capital for expansion, and in turn justified why it should be at an even higher price. And so they were further rewarded by an even higher market cap. And then they got uplisted, and they've raised 40 million, acquired 2 companies, and look at where they are now. I mean, it's been a major success story. Can we do that? We are doing that. I wouldn't say it's a me too. And with all due respect to their team, and I don't want to seem like I'm bragging, but literally when I was 19, 20, 21, I was working at Bear Stearns in the M&A department. So, while most of my buddies were going to keg parties, we were actually doing some of the biggest M&A transactions in the late 80s and early 90s. Things like RJR Nabisco and Kraft, Philip Morris, and all the airline mergers.
Barbarians at the gate.
Yes, exactly. So do I know how to engineer M&A with my team? Yes. So we will absolutely do the same thing as our market cap increases. I've also mentioned on here Lightspeed, another Canadian company, monster, 700 million to 17 billion in 18 months. And how did they do it? Same way. Investors rewarded them. They rewarded investors. They've grown through M&A. They've grown through expansion capital. And now here they are. They've become
700 million to 17 billion.
Massive. So same thing. And so that's what we're doing. Conclusion, I tried to take a conservative and an aggressive scenario here. 2 separately traded public companies. You take the same valuation metrics. Lower end potential 235 million, higher end $1 billion. We're going to try to get there pretty quick. What will that do for investors? 4 to 16x if we're valued at similar valuations to our peers. So that's my story.
And you know what? I'm going to play devil's advocate here too, because I want to make sure people see both sides. But look, to me, if you weren't generating revenue, if you didn't have customers, this would be pie in the sky kind of talk, because everyone can put together a deck, right? With comparables. That's what GoRaCom is going to be. We're going to be like Peak Fintech, and I don't have anything going on, but you guys do have it going on. So you're already there at $40 million in revenue just for 2020, right? And you're going to do now.
You're right.
So what are the risks involved here? And risk doesn't mean fatal. Risk doesn't mean flaw. Every company has risks here. What are the risks that you see that may be hurdles in your growth?
That is a great point. Execution risk and expansion risk. I would say on the let's take expansion first. So our core business, we went through the hard part last year, restructuring the business so that we could attack a higher margin profile. We believe that we have de-risked that for investors. We will, through expansion capital, step up sales and marketing teams internally. So we believe that the hard part again was last year. So we've de-risked a lot of the expansion risk out of it. When I say execution risk, that's more on, can we find the acquisition targets on both sides?
I got to assume it's a target-rich environment, Brent. There are a lot of good companies out there that have gotten to a certain stage, but they don't know how to get a liquidity event. They don't know how to go public, or they just don't want to go through the hassle. Right? I know for a fact AGORACOM would want to go public, but if I was acquired by a major media company, I'd be much more willing to do that. Even though I could probably get a better valuation going public, I don't want to, I want to deal with my operation. So is it a target rich environment out there for you? Because I'm assuming it's only growing.
It absolutely is. And what I would say is that if you look at the two business segments and if we were starting fresh, we would essentially have to cast the nets out, start to meet people, start to tell them the story. That takes a while. That takes a good 3 months, 6 months, just to get people in front of you and have them understand where you're going. Okay?
Yeah. Why should they believe in you? Why should they put their company to your hands? That makes it very, very difficult, but you guys are you guys are way past that now.
We are, and I'll tell you why, because on the AppLogiq side, you look at our strategic partners and you look at who we've formed relationships with over the past 4 years since we've been operating in emerging markets. And without letting too much out there, they're all private companies and they all are looking at their peers going public in the US and they're thinking, okay, what if we merge in with AppLogiq when they spin off? Now, I think we've indicated that, so I'm not giving any inside information, but I think that's what investors would look at. So that reduces the execution risk because they already know us and they know us well. So going public through us on a merger basis makes a lot of sense. If you look at DataLogiq, how did we build DataLogiq? 3 acquisitions in the past 17 months. Along the way, we also met other companies. They didn't necessarily have strong intellectual property, but they did have great sales teams. They have revenuing business. Actually, a lot of them are profitable, George. And so we've gone back in over this past 2 months and we've said, hey, look, we're going to expand through M&A. We'd like to revisit things. And I'll tell you, it is very target rich. And the beauty of it is that even if a merger doesn't come out of discussions with a particular company, there's a great business fit. So we'll partner with them or they'll become a customer or vice versa and everyone wins. And just for reference, we're having 2 to 3 calls a day. Almost every day.
If you told me 2 to 3 calls a month, I'd be impressed.
Well, we are super aggressive. I mean, I spent, gosh, I was busy yesterday for 14 hours. And although I didn't love it, it was exciting because that's the tempo we're operating at. And so from an investor perspective, we are absolutely out there. We will find the things that put this plan in place and will justify a higher market cap. And we will reward investors as they reward us with a higher market cap.
Yeah, and that's why I want to ask you some of the tough questions too, because it can't be just all unicorns and rainbows. But yeah, you guys have got this figured out. I think the only question, this is my opinion, I'm not putting words in Brent's mouth, but the only question now is degree of success. I don't think that there's any more question about where the company's going to be in 2023. It's only a case of degree of success now. I think that last question for you, Brent. As you do spin outs and as you strengthen up companies, M&A and so on and so forth, you're on 2 great exchanges right now. You're on the NEO in Canada and you're on the OTC at the highest levels, right? You're at the OTC QX in the US. But you talk about peak fintech, how they're making their move for the NASDAQ and other companies we've seen do the same thing. Do you guys have your sights set on that as well?
Great point. We had a press release out today. The headline has to do with one of your competitors, Wall Street Reporter, but the real
we all love each other. We're good.
Yeah, Jack's a great guy. If you read down below that, what you'll see is a sort of a soft shoe description on why we have advanced our NASDAQ application. And why we qualify. We can't speak a lot about it, but I think if investors,
you're withheld from saying much in this process.
That's right. But I think if investors take a look at what we just did, we just went through the due diligence process with the Ontario Securities Regulators and the NEO Exchange, which was quite long and elaborate. It took about 4 months to clear due diligence, but that was one of the things. That's one of the things that NASDAQ looks at, and they look very strongly at that. Incidentally, we qualify across the board, even on the share price side. I know some investors say or think, don't you have to be at $4 or $5? As an initial listing, yes. As an existing listing, there's also a $3 and a $2 tier. So on the $2 tier, that's a $50 million market cap. We're there. Actually, we're higher than that. And so we do qualify. All the other quantitative stuff, absolutely. When do we hope to do that? We're trying to get a timeline by mid to late November. I know it sounds aggressive, but
wow, that's fast. Okay.
Well, we're running there, and our file's been in, and we cleared due diligence at the NEO and the OSC, so should be a little more straightforward.
We might have a great U.S. Thanksgiving potentially.
Hopefully.
Brent, thanks for taking the time, man, to really go through. And you and I spoke about this one time. We said, let's go through visually a little more detail about both sides of both divisions of the company. Great job. I think we all see where the growth is going. I think we all see the logic, pardon the pun, in why you're separating the two divisions. And it looks like you and I are going to be back on a lot more in November with more happening. So, and by the way, I know it's preliminary, but again, great Q3 numbers, because that's the most important thing for me. In the small cap world, guys, and I'm talking to investors, obviously I'm talking to Brent. In the small cap world, there's a lot of people talking the talk. GeorgeCom widgets, we're going to be the #1 widget company in the world, and my sales are $100,000, and I'm just promoting. But in this case, great revenue, $7.7 million for Q3, and almost doubling, your growth, pretty much doubling your gross margin. You're hitting out of the park. As a shareholder, I want to say congratulations to you and the whole team, and I can't wait to see what you guys can deliver as we finish off the year nicely here in 2021.
Terrific. Well, George, thank you very much.
For everybody at home, you've been watching or you've been listening by podcast on Spotify, Google, Apple, your favorite podcast platform. To Brent Suen, he's president and executive chairman of Logiq Inc., trades in both Canada and the US on the stock symbol LGIQ at the highest of exchanges, which is great. For those who are new to the story, because you saw this big headline or you're seeing this video for the first time, two ways to do your due diligence. First, get to the company's profile page on AGORACOM, because Brent's already done a great job here, but we've also got a little more breakdown there for you as well to really understand the company. And then, of course, hop over to the company's website, do your deep dive due diligence. If you believe in the future of e-commerce, if you believe in the future of emerging markets, now they need to get in the game, then Logiq is your company. I can't tell you what to do, but I can tell you, don't tell me 12 months from now, we didn't tell you so. Thanks for joining us. Have a great day. See you next time. Hey guys, this video is over, but don't forget to help your company by liking it and even leaving a comment below. And then don't forget to help yourself by subscribing to our channel and never missing another great AGORACOM small cap video.